finished that book, Coach. Stories are very relatable. Which the New Trader Rich Trader book, George? Wow, one day. Well, I guess it is a short book. An audio book makes it even shorter. Yeah. I kind of miss audiobooks. I've gone back to hard copies. But yeah, glad you enjoyed it. It's a quick, easy read. Steve Burns, he's an author that does he does a lot of books that are good for like newer traders, like basic, simple, kind of like not overcomplicated ego type things. I thought it was a good book. From a teaching perspective, it was cool as well because not only can you see how the student interacts with the teacher, you can see how the teacher interacts with the student. So good. On to the next one then. There's a book that I've had for 2 years that I've never. It's funny. It's always the one that I wanted to read, and I still haven't. I've cracked it open. We only got about a chapter in, and it's The Market Mind Games by Denise Scholl. It's funny. That is the main book that I wanted to read, but I keep putting other things before it, which I don't understand why. I think I'm a little bit intimidated by it. Have you started it, Naomi? Is it a difficult read? Some read. I mean, my attention span, guys. Some reads are just like, ugh. Okay, maybe that's why. Stuff like that. So maybe I have to just read it in segments. That's what I did with the book. Still not finished it, but the book like Brett Steenbarger, Trading Psychology 2.0, where it covers the same things over and over again. So it's like if you keep reading it, you eventually zone out. So I've been kind of like attacking it here and there and stuff like that. I guess most books are like that unless they're purely entertainment books or just kind of really short like the New Trader Rich Trader. But Naomi said just after backtesting all day, I find it very difficult to read. Go to audiobook. George can send you a link and you can get another free credit or something like that. But welcome back to the live room, guys. Happy Wednesday to you. Happy Wednesday to you. We're seeing more movement in the market. I was excited about the amount of movement we had in the market when I did my my weekend analysis because we didn't have a lot of setups at hand per se, but there were a lot of potential setups that could happen. And we're seeing some pretty decent follow through. It's also been a pretty busy news week. Today, I would say, is a slower day, right? Yesterday, we had our Fed chair in the U.S., Powell, speaking, which moved the markets. We had some horrible news come out for Australia last night. Was anybody up trading that? Anybody up in the Asia session? I didn't pay too much attention to it. I was on the back end of doing my nightly analysis, but I think literally they came out in the statement and said, this is horrible. I think I saw it on Forex Live where it literally said, this is horrible, like in the GDP statement or the statement that accompanies it, which is never a good thing, but Aussie's got a whole type of issues. Today we have ISM non-manufacturing PMI coming out for the dollar. That's going to be most likely after our live room. And then tomorrow we have, I believe, ECB press conference. Yeah, ECB press conference tomorrow at 8:30, which is always going to be interesting. And then the day after that, we have non-farm. So we're going to start with pound yen. I actually ended up taking a trade on pound yen. However, I did not get my targets hit. Now, I'm still in the trade, but we came about 10 pips away. Less than that, 8 pips away from my target. So let's start there because this was an interesting situation. If you guys remember pound yen, right? If you remember yesterday, we were talking about how the pound yen. I did get stopped out on euro dollar. Out of that, Gartley, I am in the red dollar Canada unless something crazy has happened within the last couple of hours. So out of the 3 trades I've taken so far, 1 loss, 2 in progress, going different directions. But if you remember the pound yen here. We did a lesson yesterday. We talked about how patterns sometimes morph. How when this first started, it looked like a pennant pattern, which is a a classic charting pattern, which supposedly should break out to the downside. That's where the odds say it should. And then as price went on, it kind of morphed from a pennant pattern to like a descending triangle, which is still a bearish pattern. From a descending triangle, we had a false breakout with the engulfing candle. We then had a second signal for a false breakout passing the 50% line. And what we were looking for were signs of a potential bullish move if we could escape this range. Well, you can't see it much here on the 240 because it's very, very, very small. You can see the divergence that exists down here as well, though, for you guys that are taking that into account, bearish divergence. But as we went down to the 60-minute chart, you can see that we played around with it a little bit during the day. And then about an hour or so after we closed our live room, we did get our break and close above right here. Now, we got this really funky looking candle, right? This really funky looking candle here. It's not really a doji, but you can see it has a long wick to the upside and a long wick to the downside, which makes technical analysis very, very difficult, at least for me. So what I did was I went down to a range bar chart to get a different perspective. I went down to a 130, so a 13 range, and I went down to an 8 range to get a better perspective. And what happens there is we get a much different story. This is going to be on the 8, because I think this gives a clearer view, but you can go to the 13 as well. It gives a much clearer story of what happens, because what do we eliminate on the range bar charts? What don't we have? Again, range bar charts are just a different type of chart, a kind of a different look at price action. That said silliness. Right? We eliminate those big wicks. Right? So again, this was the candle I was talking about, which kind of makes things funky. Right? Where again, within this single hourly period, we pushed all the way up, we pushed all the way down, right? And then we still closed bullish, but obviously somewhere in the middle of that range. Because the range bars aren't based on time, they're based on price movement, right? A candle is printed every 5 ticks, every 8 ticks, every 13 ticks, whatever you set your range bar to. You don't get some of these wicks. You kind of get a clearer view of what price looks like. So instead of getting this downward thrust, upward thrust, downward thrust somewhere in the middle, you kind of get more of a trending type of scenario and a clearer way to read price, in my opinion. So that's what we got here on the range bar chart. Why are you up? There we go. Oh yeah, I eliminated that other thing. Sorry. I forgot I got rid of 4 of my charts yesterday, so I'm wondering why I'm staring at a blank screen. But went to the range bar charts, and it gives you a clearer view of the trend here. And you can see here, you can see the breakout of our channel right here. We can see our classic pullback. You can see the higher high, higher close, another pullback, and then we do what markets do. So I'm looking for a move to, 80s? 137.86. Looking for a move to 137.86. So we did not quite get there, and that was the same level we analyzed yesterday. So we'll see. What I'm hoping is I haven't been able to roll my stops at all, so I'm still. I guess I could roll them right here. I'm going to keep them below to 137. I could roll them right below this level of structure, but for 8 pips, I'd rather be a little bit more conservative. But hopefully, what we're seeing here is we see some type of consolidation, like a short-term flag pattern, and we see one more thrust up to that level. That will be a good sign. If not, then we're going to see a retracement back in the structure, and we'll see how price action reacts as we get back to the 137.50, 137.30 level. So if you are still interested in this trade, again, it doesn't look too appetizing on the 60-minute chart. Latcha just took a short on New Zealand dollar this morning. Demo still in that for now. Nice. What type of trade was it, Lax? Structure trade? Trend continuation trade? Cipher trade? George is short off a cipher? If you're still looking to get involved in this, again, it doesn't look as appetizing on the 60, mainly because of these high wicks. But you can treat this like a flag pattern, or treat it like a pullback trade, because we can still go a little bit higher. Not a lot of meat left on the bone for target ones, but there is still some. And again, if we can pull back a little bit deeper, then it opens up even more room for opportunities. Let's go down to the 15-minute chart on pound yen. We'll hit down to the 5. I'll ask you guys if you have any questions, and then we'll take a look at the Kiwi. And Kiwi was a big mover last night as well because of Aussie news, right? They go hand in hand. Aussie, New Zealand, China. Aussie, New Zealand, China. Aussie, New Zealand, China. They all go together. Any questions on pound yen? Look at this nasty chart. Nastiness of the 5-minute chart. I did not see the cipher, so I may have missed an opportunity. Well, you'll have to shoot me an X leg, George. See if maybe I can still get involved. All right. Let's go to Kiwi next, the New Zealand dollar, NZD USD. And we are sitting at 11 minutes even. Perfect. All right. NZD USD. And 60-minute chart over here. Dun, dun, dun. Dun, dun, dun. All right. As always, let's start off on the daily chart. You can see big movement on the Kiwi last night. We did not quite get a double bottom down here, but you can see the market unofficially double bottomed. We've rallied up, and now we're working towards our next level of structure, right? Which is going to be right in this area, right up here, right? This previous outside return, zoop, zoop, is going to be our previous level of structure. George says 66.85. Let me guess, that's going to be right here then, actually. Maybe I did miss this one. All right, let's go down to the 240 chart here. But again, here's our next level of previous structure resistance. Let's go down to the 240 and see if I see it now. Oh, I know you're talking about. No, I didn't. Yeah. But let's draw out this cipher. I know what you're talking about. Cipher. Right in here. Nope, no. Right in 66. 85, 85. Right here. Where are you at? Right? This one. Yeah, there we go. Because this is the spike right here, right? The B leg. X to A, right? A to B. Yeah, B to C. C to D right there. I don't know why it's saying invalid cipher. Let's measure it out. I'll zoom in a little bit here for you guys. All right. You got your X to A. Your initial swing high to swing low. You got your A to B, which comes back to a 382 retracement. All valid there. We can take our Fibonacci extension from our X leg to our A leg and back up. Check that. This is why Enigma is saying, or the cryptographer is saying invalid cipher. Check this. Check your C leg just to make sure it hits. New Zealand dollar is a little bit wacky. New Zealand and Aussie are a little bit wacky when it comes to currency quotes. Just double check that C leg. Make sure it hits that 127. If it does, it's a valid C. If it doesn't, it is not. And then what you're looking for is a decompletion right at your 786, where we are currently holding. So you got your zone, right? If you see this as a cipher, you have your potential zone right, your potential reversal zone right here, going from the decompletion to the X leg. We also have that X leg on the higher time frame as being that same level. If we bounce back up to the daily, being that same level of daily structure. So if you're a trader that's looking at this structure level on the daily as a place for some relief, and you're a CTS trader, you can also add in the cipher, because technically, as long as we stay within that zone, the cipher pattern would be valid in there as well. So you can add those 3 points if you are allowed to in your CTS trading. So what else do we have here? We have a slight bit of divergence, right? We have equal highs here on the RSI, and obviously higher highs here on the price chart. George says, I don't know why yours says no. My Enigma has 0 tolerance, and it says yes. Who knows? I don't know. Doesn't matter. Trade what you see. Trade what's valid on your chart. That's all that matters. But yeah, I don't know. Maybe Enigma has it right. I was using the cryptographer. Let's see what Enigma says. Shake it around some. Shake it, shake it, shake it. Shake it, shake it, shake it. Could be, there we go. Yeah. So Enigma has it on mine, the cryptographer doesn't. So I could have pulled it from a 1/10 of a pip. Who knows? It looks like it's very close, probably like a 1/10 of a pip off or something like that. But the Enigma tool actually does have it right in here. All right. So if you're looking for short opportunities and you're not a cipher trader, you're trading at a minor level of structure. I think this is what Latch was referring to, Lax, right in here. And then if you push higher into that zone, you have a more significant level of structure as well. So you can start looking for shorting opportunities on the New Zealand dollar if you are a structure trader. Let's head down to the 60. Boom, 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 boom. 60-minute chart here. 60-minute chart here. You see market losing a little bit of steam. Still pushing forward, just losing a little bit of steam as we push higher. Dun, dun, dun. Let's go down to the 15. 15-minute chart. You've got a double top that has formed. You can see your initial top right here. Nice little ascending triangle breakout. Initial top right here. You've got a retracement. That retracement does come into structure. So if you're someone that trades maybe trend continuation and counter trend, this may be a filter that disallows you to take this or look at this as a double top. But you do have a retest of structure. You've got bearish divergence on the RSI, and you've got an initial move off of that. However, you haven't broken and closed below this level yet. Down to the 5-minute chart, you get a clearer view on the Kiwi. Looks like this could have been a nice little Gartley pattern in here too, a small one. X to A, A to B, B to C, a small Gartley in here as well. How about that? Right on the dime. C to D. Any questions about New Zealand dollar? Lat said he took a small head and shoulders on the 5-minute for an entry. Questions on the Kiwi? All right. Let's go to Euro Yen next. Euro Yen. Let me just cross these off my list. Boom. We did New Zealand dollar wasn't on there. We did pound yen. All right. Let's go to Euro Yen next. Now, Euro Yen, if you remember, we were looking for a potential reversal pattern on this pair. Many of the pairs were looking for the same thing. Looking for potential head and shoulders. Price action that come down to this level. We were holding it on the daily, and basically we had a lot of indecision. Now, if we get a break and close of the daily below 121.89s, that's going to be a completely different story. This is not the daily chart. That's why it looks weird. Let me go to the daily. There we go. I'm like, why does that look like that? So here's our potential reversal on Euro Yen. Again, we're in that zone of massive wickedness. And we saw the big bearish momentum candle, followed it up with 2 bullish days. And we're looking to be on our 3rd right now. And again, looking for a potential reversal. Now, this is a setup that can also look like a trend continuation trade, right? Many of you guys may be looking at this and saying, hey, Akil, here's a pullback. Here's an extension. Here's a pullback. why are you not interested in getting short? And what do you think my answer to that would be? Anybody else? Nope. Yeah, simply my overall view of the market. Again, IPDE. When you look at the daily chart and you ask yourself, at this level, right? Do I think we're more likely to go short than long? My answer is just no. I don't see, I don't trust us going short because we're in that zone of support. And it stinks that that zone is so big because of the wick. But I am not a fan of buying at ceilings. I am not a fan of selling at floors. So when I look at this situation, I ask myself, do I truly believe that the market has a better chance of going lower versus higher? My answer is really I don't know. I wouldn't bet money on it. So if I'm not willing to bet money on a prediction, should I be entering trades on that prediction? Probably not, right? I never had the full account. I only want to place trades on stuff I believe in. Now, if you look at this, if you're a trader that looks at this and says, "Oh yeah, this is trend continuation all day, baby. We're going to test the lows. 119s, here we come," right? Then guess what? Then this is a great trend continuation situation for you. But again, that's based off your prediction. Your prediction is that, hey, we're likely to continue lower. So you always got to do what's in your prediction. I can't tell you how many times I've spoken to traders who have taken trades. Akil, I'm in this trade, blah, 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 blah. And then I asked them, well, do you think we're going to go that low to your target level? Probably not. And then I say, okay, well, why are you in the trade then? And then they think to themselves, why am I in the trade? And then it gets weird. It seems absurd, but I swear that happens all the time. Mostly with target taking, where there's a target at a certain level, and it's like, do you think price is going to go to 126? Probably not. Then why is your target at 126? Well, because that number sounded good, right? You never want to put your target at a place you don't think price is going to go. You never want to be in a position, unless you have to, where you don't think price is going to go, or you don't in the direction that you don't think price is going to move. So I'm only looking for bullishness here. Let's go down to the 240 here. And one of the things we were looking for was a potential head and shoulders pattern, right? So we're setting it up. Yesterday we had a left shoulder. We had a potential neck. We had a head. And now we've rallied up to that neckline right here. And what we would be looking for next is for that right shoulder to form. Now, in your best head and shoulder patterns, right, you're going to see a symmetrical right shoulder. So we should see price come somewhere in this level. Now, does that mean it's going to happen? No idea. No idea. But in your best setups, you have somewhat of a symmetrical head and shoulders pattern. And you can see there's a little bit of inside structure here as well. Avery says bear bat on the hourly. Got to give us more details, Avery. Give us an X leg. Give us an X leg. But I know what you're talking about, but just getting in the habit of giving us an X leg. I think George looked at this one. He looked at one on the dollar yen yesterday. But I believe I know what you're talking about. So waiting for your head and shoulders pattern, trader, waiting for a right shoulder, and then waiting for a break of this neckline. Now the one issue with this is that we've got structure hiding right on top of it. So profit taking is going to be difficult because we're coming right back into consolidation. So unless you're finding a reason to enter at the right shoulder, probably going to be hard to get any type of relevant trade off of this, unless you're not concerned with this higher level of consolidation and you predict that we're going to break right through it. But it might be a little bit hard. So we go down to the 60-minute chart, right? Go down to the 60-minute chart. Let me draw Avery's bat real quick. Let me know if I'm wrong, Avery. Avery's looking at X to A to B, B to C, C to D up there. Should be right? If not, I'll redraw it. I think this is what you're looking at. We're going to assume it is. All right, so you can see price action retracing right now. So price action had just, let me ask you this. So we have 2 bearish candles in a row, correct? What happened before those 2 bearish candles? We had 3 bullish candles, right? So we have 2 bearish candles. Well, I guess 1 and 1 in progress. We had 3 bullish candles, right? What happened before those 3 bullish candles? We had some consolidation, right? We did trickle up and do this dumb little move. But right here, we had a little bit of consolidation before the expansion. Would you guys agree? Market coiled a little bit, then boom, right? Someone squeezed the spring and then let it loose, right? This is the level I would look for a potential buying opportunity. If you're looking for a right shoulder trade, look here. If you're looking for a right shoulder trade, look here. If you look left, it does end up being symmetrical with our left shoulder. We do touch this inside level of structure as well. If we bring a fib on real quick, just eyeballing it, looks like a 382 in that level. Fibonacci retracement, swing low to swing high, 382 right in that level. If you're looking for a right shoulder trade, that's where I would look for. I would look to get involved in this level. I'd look to get stops right underneath this zone. Right? And I'd look for a move up to retest these highs. And even break that neckline and potentially move to the next level. That's the trading opportunity I see here on Euro Yen. Make sense? Yep. Set down to our 15er. Again, you see our consolidation a little bit more clearly. We'll go down to the 5-minute chart. We're going to end up going down to a range bar chart as well, but nice double top up here. This would have been a nice trade in its own right. I was looking at this as I did my morning analysis, but I can't enter trades this early. But this was a nice trade, or I can't enter day trades this early. This was a nice trade as well, because essentially, right, double top, right, market had already been giving us some diversions from basically right here. So it looked as if it's just a matter of time before we roll over. But double top right up at your previous structure highs here. So that would have been a very nice counter trend move for anyone that would have taken it. The tricky part would have been this, because there were 2 double tops here. Your initial one was actually right here. Now this was before I started my analysis. This would have been your first one right here. Depending on how tight your stops are, you may have been got by your second one. But regardless, nice little setup there. All right, let's take a peek here on the range bar charts on Euro Yen. Pound Yen, you're going the wrong way, Pound Yen. You're going the wrong way. So here's a look at the 5 range. Let's go back up to, let's do an 8 range bar chart. Just to see if there's any different perspective. Should be exactly the same. Yeah, no big difference. The consolidation looks a little bit different, but again, this is the level we're looking for. This is the level we're looking for. So keep an eye on Euro Yen. Keep a chart up. Look for a move back into that 120, 170s. If you can get a buying opportunity there, it could be a way for you to get involved in an aggressive move of that right shoulder. Questions on Euro Yen? Nope. All right. Let's do... What do you guys want next? Pound dollar, dollar yen, or euro pound? I'll let you guys choose the next one. Pound dollar, dollar yen, or euro pound, or something else. Euro pound. Okay, euro pound had a nice pullback on it. Again, following up on yesterday's conversation, we had the euro pound set up will give us what really looked like an excellent structure-based short, which changed into a breakout, which now could be a potential trend continuation trade. Last says 26.18 on it as well. I didn't see one, but I will look for it. We may have been looking on different perspectives. When I do my pre-market analysis, I'm only looking higher time frames. So if it's anywhere below the 60, I just don't know what's happening. But we'll see. I don't. Yeah, we'll see when we get there. So euro pound, without doing a full recap of it, because this should be fresh in your mind from yesterday. What we've essentially done is we broke previous structure. Right, we're looking for a pullback and the opportunity to trade it a little bit higher towards the next level of structure, which is going to be this little block, little being massive, of consolidation. So as we head down to the 240, we head down to the 240 chart here. We can see that there's our breakout. We had the big engulfing candle, right? There's a little rising channel here. We had the big engulfing candle. And then essentially what has happened is the market started settling, right? It started doing typical euro pound stuff where it gave us about 1, 2, 3, 4 candles in a row, which were all indecision candles. And then it gave us a higher close. And now it's giving us a bearish candle. So if this ends up being a double bottom on the hourly, then yeah, it can certainly be a 26.18. So let's check it out. And that could be a reason for you to enter long. But you can see very similar setup if you look at this. Just doing some candlestick analysis. Not so different than this, right? You guys see the similarities? Obviously, they're not mirror images of each other, but the fact that we're coming off a high momentum move and then we kind of just coast and do nothing for a few candles before exploding up. So we could see a similar type of move here on the euro pound. All right, going down to the hourly. Here was your, so here's the double bottom. Or you can look at it as consolidation, whatever stands out to you. I can probably see about half of you saying double bottom, half of you saying not really, just sideways movement. Honestly, it doesn't really matter. What's most important is that we broke this level. And this is what I put to you guys yesterday on the chat. And what I did on the Pro Trade log yesterday is when I looked at this, and it didn't necessarily stand out as a double bottom for me. Now, in my mind, I knew that it probably was a double bottom, but it wasn't one that I can 100% say with certainty, yeah, that's a double bottom. So what do you think I did in that situation to get a clear picture of it? Yeah, I didn't really see any. Naomi says why? Because it's less arched. Yeah, I really see this as just going sideways. I don't really see a retracement. I see this as just kind of the market moving sideways. There's no real clear bounce off that level. And A lot of it's because of these wicks. You got long wicks to the upside and the downside. But for me, it was just kind of a move, like a shuffle sideways. You know, very similar to this right here, where it's like, you know, you can call this a double top, double bottom as well, or you can call it just a move sideways. So I looked at it as just a consolidation sideways. But when I went down to, I think it was the 80 range, yeah, was it, or the 8 range? 8 range, it was. So it was a much clearer picture down there on the 8 range. And again, you don't have those wicks that make the visual as funky looking here. And what we're looking for in either case, whether you saw it as a double bottom or not, was a break of those highs in anticipation that price would go higher. And you can see that we did break those highs just barely. If you get onto a lower time frame, probably a clearer picture. But we broke those highs here, and we broke them again here. Now we've retraced right here. I think this is a good opportunity to buy it. A good opportunity to buy it, right? You have a structure shelf right here, right? So you have a place where stops need to go below. If you're using, say, an ATR stop and you want to take stops below these lows, you're looking at 88.52. That's going to be 88.43s, right? So a stop placement that goes about right here. And as far as that the double bottoms go, and that's gonna be the art of interpretation, unfortunately, with trading. And that's gonna be training your eyes. I spoke to a trader yesterday on our chat about that, where he was talking about getting into back testing. He's like, yeah, I just back tested, I think the Jason Greystone trend continuation, and now I'm gonna go right into ciphers. I'm like, well, how familiar are you with identifying ciphers? He's like, not too familiar yet. I'm like, you should probably wait before backtesting because your eyes just aren't trained. And what's going to happen is you're going to go through and you're going to see the first half of your backtesting, you're going to see something completely different than the second half because your eyes are not trained. But you can set yourself up with a stop loss below these lows, and a safe target could be right up here. And that should give you a quality risk reward, again, depending on where you get involved at. Let's say you wait for a higher high, higher close at this level. That's going to give you a potential reward of about that, a potential risk of about that, and obviously it's going to shift a little bit depending on where you buy it up at. But not a bad trading opportunity here on Euro Pound. We also may see this turn into something else, right? It's very early in the game, but this may also turn into, say, a Gartley pattern. Right, we're going to need that 618 Fibonacci retracement, which I don't think we hit yet. Nope, not yet. But if price were to do something like this, and say we rally up a little bit more, you could end up having a Gartley as well, and that will just give you a deeper point to buy. So, not a bad opportunity on Euro Pound. Let's just see if we do rally up from this point, because we never really talked about extended targets. What are a few things we can do to predict targets for someone looking to take an extension? We know we have the big level of structure, higher time frame. We have that level of consolidation. We can take an equal measure move, right? We can take our last swing, right? Our last swing low to swing high right here. We can put that on to our retracement. And we say that if price action moves in a one-to-one measure move, that's going to put us right up here near the yellow line that we already have. We can then pair that with a Fibonacci extension. So Fibonacci extension from swing low to swing high. And back down. You can see I'm going to have a 127 a little bit lower. 1618 significantly higher. And of course we can look at these levels and say, where does that line up with structure, right? So we just take a look out at the 4-hour chart, make it pop out to a daily. we could look at these levels and say they're right at the bottom point of our structure here. So not a decent a decent place to look for if you're looking for an extended target here for this move. Any questions on Euro Pound? Here's a look at the 15. Ooh, we might have just maybe a cipher. Look at that. Well, let's see if that B leg is legit. Nope, 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 nope. Not a cipher. So if you're here in the 15, right, you have a higher high, higher close already. And again, this is all going to be predicated on how low you're able to go in your time frame. But you got some nice candlesticks forming, right? We're coming down to the bottom to basically to retest that area of sideways movement. And look at the recent candlesticks that you're getting down at this level. Now, you know, part of this is it being the euro pound. This is how the euro pound moves. But you have bearish candle, bearish candle, bearish candle, right? The close is a lot higher towards the middle on this bearish candle, right? You can see the wick to the downside showing you that there is some buying pressure. We then followed it up with basically a doji candle here, a sign of indecision. We then get a higher high, higher close. We then get another doji candle. We then get a pin bar type candle, a pin bar that forms in a weird location. And now we're getting another candle with a long wick. So the market is showing you that there is a battle ensuing at this position. Now, who's going to be the ultimate victor? That we don't know. But this is an important level. So if you were able to get involved in the 15, I'd buy it up right now in this higher high, higher close, this 3-bar reversal. 1, 2, 3-bar reversal right here. And again, hide stops right underneath this this level of consolidation. And I think it's a pretty decent trading opportunity. You may even, I didn't look on the 5 range, but look at that. You even got those wicks here in the 5 range. So very, very similar story here. Higher high, higher close being at the same level. So I think it's a decent trading opportunity. It'd be better if it wasn't the euro pound. Because that pair just is like, we call it the molasses pair. It kind of just does nothing for like years, but a decent trading opportunity. Speaking of which, I got a message today from one of our traders. He wanted me to ask you guys a question. Let me see if I can bring it up real quick. He asked for your assistance personally. He said, Akil, how are you? Hope you're well. I backtested a strategy on a pair today, and it took 4 months before a target was hit. Yup, you heard it correctly. 4 months. This got me thinking. Is this trade's duration too long? How much discipline is too much? Should there be rules to help with this? Anyway, it came to mind. I thought it could be a great discussion between new and seasoned traders in your live room. Might also help newer traders understand the reality of trading. So, what do you think? And real quick, Naomi has a side question while you guys are pondering that. It says, Akil, I have a question. What do you do if technically you get a new structure high with a higher high, higher close by 2 pips, and then you technically get a double bottom, but then when price continues higher, it then pulls back, and you can clearly see that it's an actual retracement or an outside return? Is that just the way it goes, or do you have some rules? I noticed this in some of my back testing and just thinking of what it potentially include a rule once I review. I would have to see a chart to fully understand what you're talking about, but if you technically get a new structure high, I would count it as a new structure high, and I would follow the path that goes after that. So if you get a new structure high, even if it's 2 pips, if it's by 1 pips, and then you technically get a double bottom, that's the part that's hard for me to kind of visualize right now. Um, so you'd have to shoot me a chart so I can see. Yeah, if you shoot me an email right now. We could look at it in the live room. I don't mind doing that. But if you technically get a double top, if you technically get a higher high, higher close, I would treat it as if it's a higher high, higher close. I would not deviate from that. And understand that sometimes the market just, the market does market things. Unfortunately, again, the market wasn't made to obey our rules, right? The market is like, it's like, what's the most aggressive animal out there? Silverback gorilla, a lion, the honey badger, right? It's like those stories you hear of where people are like, yeah, people living in New York in a studio apartment, right? And they've got a fully grown pet lion, and then one day, right, the lion attacks them, and it's like, well, I don't think lions are meant to be domesticated, right? They are natural, just like killers that eat for they kill for their meals. They're not like dogs who have been domesticated and it's like, hey, human, I need you for food. No, lions go out there and kill. So it should be no shock when your fully grown pet lion kills you. It just, I have no pity for that. I'm sorry. I'm not owning something like that. It's like me having a pet silverback gorilla. No. So I think we always have to understand that that's the risk we take. That we put rules around the market, right? We put a cage around the market rules because it gives us a sturdy backbone, a philosophy. It gives us a path to take as far as our analysis. But we can't expect that the market is going to follow those rules. The market doesn't have to do anything, right? So we can make the prediction that if price action gives us a higher high, higher close, then we're more likely to go higher than lower. Yes, and I truly believe that's the case. But the key word is we're more likely to do it, not we will do it. We have to do it. And sometimes the market is, you're going to, same thing like for you guys that have had the perfect trade set up and you're like, man, everything I ever needed in a trade is right on this chart, and you take it and then it loses right away. And you're like, what the hell? That's going to happen too, unfortunately. Nobody says, yeah, it is the type of double bottom that pulls into structure. Not sure if I would include it once I review, but I'm now capturing everything I can filter out. Yeah, so I gotta see a visual because I'm a little bit confused about a higher high, higher close and then a double bottom. Is it a higher high, higher close and then like a full retracement back in the structure and then a double bottom, or is it a? That's the part, because when I picture higher high, higher close, I picture the market going up this way, like breaking previous structure. When I picture double bottom, I picture the market going this way and then giving a double bottom like that. So I'm maybe it's a double bottom right at previous structure, perhaps. But I'll this first one or this one right here, a small retracement. Okay, so the question is okay. I got you. So is this a double bottom? It could be. You could look at it as a double bottom if it comes to retest previous structure highs. So I'll draw this out a little clearer for you guys. Where we're looking something like this. Here's previous structure. We break previous structure like that, and then we immediately we break it by just the smallest of pips like that, and then we immediately do something like this, I'm guessing, right? So the question is, where does that V retracement come to? Does that V retracement test previous structure highs here? I'm assuming it does because it only broke by 2 pips. But does that V retracement, so that V retracement doesn't test these highs? Yeah, then yeah, it's a double bottom right after breaking previous structure, yeah. It would be a double bottom, yeah. Now again, just like some of the opportunities we looked at recently, that double bottom can shift, right? So if it doesn't immediately do something like this, it could then become a high and tight flag. It become a pennant pattern. It can morph over time if we don't see a reaction off of it. But initially, yeah, double bottom. Yep. Okay, but say I include that retracement as price continues higher. I can then see that it isn't my outside return. Can I change it even though I entered it on a double bottom on that retracement? Yeah. Mm-hmm. Of course you can. Of course you can, yeah. Yep. It's all about your interpretation. That's what the market is. It's all about your interpretation. The market is so much more about interpretation than it is about science and numbers, in my opinion. Yep. And what was something at first doesn't always remain something. Again, you can take something as a. I've taken plenty of double tops which turn into flags and broken out against me. And then when the market comes back to them, I now don't see it as a double top. I see it as a flag pattern. So things, excuse me, things morph and change all the time. Yeah. John says, stupid newbie question. Why is it a double bottom and not a double top? It's hard to show right here, John, because she's talking about a very particular case. But basically, here's what she's looking at, and I'll show you why. It's because we broke previous structure. So like, say this is your previous structure here, previous structure highs. Basically, and I'm going to give a stretched out version of this. Naomi's saying that we violated previous structure highs, right? We came down as a retracement and we double bottom on a retracement, right? So this would be a clear double bottom, correct, for you? This level right here. Now what she's saying is this, and it's hard to draw out. She's saying that what if this retracement, right? What if this pullback was just very, very, very small, like this? So that's why it's hard to see, and that's why. So it's more like, if you guys could even see this anymore, it's more like that. Can you see that? So this is technically a double bottom. Now this is also why I asked the question. I said, how far does this retracement come back? Right? Because if this retracement comes back to here, then guess what, John? Now you're in a completely different situation, because now, is that a double bottom or is that now a double top? Well, now you've also got a double top before potential double bottom. So it really depends on how it forms. Look at euro shooting up, boom. Look at pound yen shooting down. Ugh. All right. Markets are waking up. Markets are waking up. Yeah. Hold on. Is that good for our Canada trade? What's our Canada trade doing? We had started going back to break even on Canada. All right, so let's go to No, John. Look, John. Don't be sorry at all. Don't be sorry at all. Yeah, you never apologize, because guess what? If you don't ask a question, you never get the answer. Yeah. So I don't know if you've been a part of other trading forums, but this is a completely different space. This is a completely different space. You do not get judged for asking questions at all. The only time you will get judged for asking a question is if you say something like, Hey, Akil, I just got loaned the euro dollar in my live account, but I don't know why. Help me out. Then you will get judged. And then they'll be like, what the hell is wrong with you? So aside from entering a trade blindly with no rhyme, rule, or reason in your live account, not knowing where you're getting out at, whether stops or targets at, you won't get judged for your actions. You will get harshly judged if you do that, though. Deservingly so. Deservingly so. You should be judged if you do some dumb stuff like that. All right, real quick, going back to our pound yen for you guys that didn't have a chance to get involved, right? We got our pullback here. You got a lower low, lower close. So I don't know if anyone's looking, but you can look to get involved in this level again. I was shooting for 86s. If you're shooting for that same level, you'd probably adjust that now to the highs. I see no reason if you're newly involved in the trade to shoot for 86s when you have structure that formed at 77s. At least for your first targets, but you can still look to get in the trading opportunity. I don't know if that risk reward would still make sense, but it's giving a secondary opportunity. Hopefully, this is the retest that we're looking for. We didn't quite get our RSI swap, I don't believe. Can I see RSI if I click this as well, George? Nope, just candle information. I don't think we get our RSI swap. Nope, 20.43. So not quite, but this is our pullback in the structure. Either two things are going to happen here. We're either going to see a continuation up or we'll see some type of consolidation and then a reversal. Ideally, I'd like to see us go up really, really quickly. That would be a positive sign. The longer we hang out at this level, the less confident I am about the trade. Now, me being confident about the trade, does that do anything to my trade? Does that mean I start taking stops out early or taking targets out early, start moving stops? No, it doesn't. You could do that. There is a dynamic form of trade management, but I wouldn't advise doing that until you're at a very high level of trading, until you've completely thrown away your psychological demons. Because as long as you have those psychological demons, you can convince yourself to do anything. But there is a way you can actively trade based on price action, especially if you're going to be a day trader, once you reach a level where you're no longer emotionally involved in the market. So I would say I can do that at my point in my trading career because I don't really care about any trade anymore. But, 5 years ago, 6, 7 years ago, probably not. 5 years ago, probably yeah. 6, 7 years ago, no, probably no way. So we'll keep an eye on that. I want to do one more pair. I do want to take a look at, is euro moving, guys? Euro dollar? I think I'm looking at that move. Let's do euro dollar. I feel like we haven't done euro dollar in a while, despite this being the most popular pair. John says, no, I'm the guy who registered with a couple, but was harassed. Like, you can't believe which, I think you mentioned in YouTube video the other day. Registered with a couple, but was harassed. Like, you can't believe which. I harass so many people on a daily basis. I just can't keep track of who I harassed last week. No, what did you register with? It could be a joke, and I'm just seeing it very, very late. So, but the amount of people I harass, it's hard to remember. Joking, guys. I don't harass people anymore. I don't harass. I just spit facts. I spit facts, and if you get in the way of those facts, it's on you. All right, euro dollar daily. Pushing up towards our previous level. If you guys remember, we were looking to set up a Gartley here as well, but our C leg ended up violating our A. But we are at a previous level of structure resistance, these highs. If we break these highs, we're likely to go to the next highs. Oh, okay, now I remember, John. Yes, register with a couple of brokers. Yeah, okay. Yep, now I remember. Yeah. Yep, I remember. Yep, now I remember. Okay. The broker part was left out. Yep, I remember now. Yep. Yep, and do this, do that. Yep. So if we break that level, 114 is where we're likely to go. So if we keep that in the back of your head. If we break 113.30s, 114 is where we're likely to go. But for counter trend traders, there's also it's probably not going to be a great one because of how price action got here on a lower time frame. But there could be a counter trend trading opportunity. Real quick, I just want to take a quick peek and see if there's any particular reason market is moving right now at 8:30. Canada Q1 labor productivity, U.S. yield, pound yen, U.S. ADP May. That's right. Today is I didn't even think about that. Yeah, forgot non-farms week. So we have our precursor numbers coming out. Yeah. 8:15. I didn't mention that this morning. 8:15 was our ADP non-farm employment change. Yeah. Why did I think that was usually Thursdays? I thought that was usually Thursdays. Okay, so basically what came out was the precursor to Friday's jobs report. So what people look at, it's not a major news event per se, but traders start making predictions on what's going to happen Friday based off of the news that just came out today. So it was a miss on the news. I believe. It was a plus 27 versus an expected 185K. So it's just a small miss. just the worst since March 2010. Prior was 275K, revised to 271K. That's a weak one. ADP misses badly, and that's going to set off some jitters. Dollar yen is quickly down. Yeah. So a small change, just a massive miss, worse since 2010. So not a big deal. But what that does tell me is, and again, what people are looking at here is not only the non-farm numbers that are going to come out Friday, but everything goes back to what? Interest rates, right? Everything goes back to interest rates. How do we feel about the economy? Oh, big miss. Oh, we're doing poorly. Oh, we shouldn't hike. Oh, we should cut more. It all goes back into people starting to kind of make their predictions, just as we do in the markets with like price action. The fundamentalists, they start to make their predictions on what they think the next policy change is going to be based on this number. So it's interesting stuff. That is a massive miss though. I saw the number here on Forex Factory, and I didn't believe it. Because it's massively off, but yeah, it happens. All right, so let's go to euro dollar real quick, then we'll take our break. Euro dollar. Hold on, real quick. Give me 1 second, guys. Hold on. All right, so approaching that level of structure, let's get on to the 240 chart. John says, hey, George, my current measure of success is how long a trade lasts before I lose. Oh, man. Demo count. George says, we'll help you change that. Good trade equals met rules. Bad trade didn't meet rules. No outcome based. Getting better. I last longer each trade. Always good when you last longer, John. Always good when you last longer. Euro dollar, 240. Going, again, we're rising into our previous level of structure. I don't know why Naomi's laughing. I don't know why Latch is laughing. What are you guys thinking? You don't want to get stopped out of a trade right away, do you? You don't want to enter a trade and get stopped out immediately, do you? You want to hang in there for a little bit. Gain a little bit of respect. RESPECT. So rolling into this level again, it's going to be a counter trend trading opportunity. The question is going to be, is there enough room? Is there enough room for the market to reverse and go to your projected level? For a swing trader, I don't think so. Mainly because we've done this consolidation prior to this level. So I'd be cautious taking any type of target less than 112.75. But from a day trading perspective or a shorter term intraday perspective, if we can spike up here and get a signal at 13.25, more than enough room, 40, 50 pips to the downside. So that could be something that's doable. Let's head over to the 60s. And this may be another one. Actually, range bar chart may make this look better as well. Head over to the 60. Hopefully, maybe bad news will save my bacon on this dollar Canada trade. Bacon. 60-minute chart. Nice little pullback here. Right? Higher, higher close right here. Pull back in the structure. Obviously, you couldn't predict that rally, but it's there. But a nice little pullback trade again. Nice candlestick wick right here. However, you didn't get the higher close after it. So although the candlesticks look good, there is never that defining signal to say that, boom, it's reversal time. So probably not much you could have done with this at this level, regardless. Boom, boom, boom. A little bit different story on the 5-minute. You do have a double bottom down here with a deep test. I like those deep tests. So not bad. Yeah, so let's go to range bar chart. That's probably the only chart that will give you opportunity here on the euro dollar. I would say this. We're starting to put in an ascending triangle here, or a wedge. Could be another pregnant pause before a break higher. So if you're a breakout trader, wait for that break or wait for that break and retest. And you can potentially ride this thing up to that higher level of structure. So, questions on euro dollar? Any questions at all before we take our first break? Horrible number, man. That's bad. That's a bad number, man. I'm shocked by that. Questions going once, going twice. All right, let's load up the clock. We'll take a 54-minute break. Nope. We'll take a 13-minute break, and I'll see you guys when we return. All right, gang, back a little early, but let's start round 2 of today's live trading room day, the New York session. So far today, we've looked at pound yen. We've got a trade on the table there. We've looked at New Zealand dollar. We've looked at the euro yen. We should probably take another look at the euro yen, just keep it on the radar. We've looked at the euro pound, and we've also looked at the euro dollar. Let's head over to the dollar yen next. We did receive a pretty bad number from the dollar this morning, so we're seeing some movement on the pairs. Let's take a look at the dollar yen and see what, if any, effect that has had on that pair. And we were actually looking for, it actually blew out the water what I was looking for. Let's go to, well, we'll do dollar yen since we're here. Dollar yen, we'll start on the daily as usual. Just give me a second to write down the time so I can post it to you guys later. But you can see we've been in a little bit of consolidation here on the dollar yen. We're trading right at the close of the mega wicked candle. We've recently had a very high momentum bearish candle. And then we've just kind of really consolidated a little bit for the last few days or so. As we go down to the lower time frame, what I was looking for here was a head and shoulders type of pattern. You can't really see it here on the 4 hour. But if we go down to the 60, you'll see it clearly. Now, this is another situation, before we get on to the 60, this is another situation where, yes, we could go lower. We just want to be cautious in that approach. But if you're looking for a short opportunity, again, what you want to see is you want to see these lows taken out, right? You want to see these 107.82 lows taken out, and then you want to look for the continuation there. And again, you just want to be cautious because as we look at the daily chart, we're within that big wick. So there's just not a clear idea, at least in my opinion. There's not a clear idea on where price can go to. In my opinion, it could go as low as the bottom. It could reverse a pip later. You just don't know. So there is that little bit of uncertainty there. Now, as we work our way over to the 60-minute time frame, what I was looking for was a reversal. I was looking for a head and shoulders reversal. I was looking for the market to do this, give us a left shoulder, right? Very similar to what we're looking at with Euro Yen, to do this, right? Connect the dots on your neckline here. If you're doing a trend line type of neckline, it should actually be like this. If you're doing more of a horizontal neckline, you're looking at this level right here, need to be broken. Either way, you're looking at a right shoulder giving you a head and shoulders pattern. I was looking to see or waiting for a violation of this level, that yellow line, and a chance to continue higher up into these previous lows right above the 109 even handle. And you can see that would have given a pretty decent opportunity, about 108.50s up to about 109s. Did you say double bottom on the W40, but not a good spot? DW40? I didn't say double bottom on the 240. No. No. Again, for me, this is not going to be the double bottom. If you were taking one, it would have been right here. This smaller one right here. Not this one right here. So I wouldn't be interested in double bottom. I'd be looking for a break above that level at this point, yeah. But this would have been a double bottom right here. Get over here. For me. And it's still technically valid. Now we haven't, again, good moves should move off of there. We haven't been able to do so. That's why it turned more into a head and shoulders type deal. But we're still valid. We never closed below those lows. So it technically is still, that double bottom, that first one, is still technically valid if you're looking to take it. We've pushed below those lows, but because this wick was so low, we never closed below it. But yeah, one of those situations where it morphed. It was a double bottom that changed into a potential head and shoulders. I don't think it's a bad area to look for longs though. Again, we have a little bit, we're at structure here. If you look at the yellow line, we're at structure here on the 4 hour. On the 4 hour, we could dip a little bit lower, 107s. But as far as my higher time frame goes, the daily, we're very close to the lowest close of those candlesticks. It's right below us. So I don't think it's a bad area at all. I know I'm personally looking for a reversal at this area, which we may not get now since we saw that move, but we haven't violated it. But yeah, I'm looking long as well. Looking long as well. But yeah, it's when I look left, I don't like the area. Yeah, it's one of those areas where we could go low, we could go lower, we could go higher. And that's one of the reasons I'm looking for as much confirmation as I can. That's one of the reasons, instead of just looking at that as a double bottom, I want to see a 26.18 or some type of violation of that level to get some confirmation that, hey, this reversal is more likely to happen than not, and then look to get involved in that secondary move. And it goes back to the conversation we had on just, being adaptive in your trading. In your, quote unquote, your best situations, you want to be more aggressive. In your not so great situations, you want to be more conservative, right? It's no different than, you placing a bet on a team, right? If you're a sports bettor, right? And you have a team that is really good playing against a team that is really, really bad, right? Are you more likely, and well, let's not even talk about odds and just playing for the upset, but you're more likely to bet more money, right? When the odds are in your favor. When the teams are more evenly matched, you want to be a little bit more cautious in your bet. Maybe you want to do a little bit more research and just saying, oh, this team is great, that team stinks, they should win. When it's a little bit more iffy, a little bit more even, now you're digging more into it. And trading is the same way. When you have your best situations, whatever your best trade may be, and everyone's best trade is something different. But whenever you have your best trade, you can afford to be more aggressive. Whenever you have your not so best trade, you may opt to be more conservative and look for more reasons for entry. So we've come down here on dollar yen. We've ruined our head and shoulders, first and foremost. We've ruined our head and shoulders. We've come down on the US number. We've attempted to break these lows, and we failed. Right? We failed to break those lows. So we may see some type of correction. I mean, it's a really bad number, but we may see some type of correction. This may be a ploy, right? If you're into conspiracy theories, right? This may be a ploy by your institutional traders, right? To stop some people out and really establish their long position. Who knows? But you could look for a buying reason down here as well if you get the right signal on a lower time frame. So let's go down to the 15. Again, the best approach, in my opinion, is still wait for that confirmation of the break of the highs. But if you're an aggressive trader and you want to look for a reason to get long down here at the very bottom, you know where your stop loss is. It's not too far away. You can play for a potential correction. You just want to make sure that you have a reason to do so. You're not just doing it because you want to take a fly on something. And I don't personally see anything as we go down to the lower time frames here. So we can take a quick look on the range bar charts, but I don't see much here on dollar yen. You got a little bit of consolidation here, but that's going to be below structure on the range bar chart. So if anything, you can look for maybe a 26.18 type of trade here, 36.18, I guess. Something like that. I don't think it's a great situation to put your money at risk, but I know some traders like doing stuff like that. Questions on dollar yen? Let's see what the cable is doing next to pound yen. Or the pound dollar, excuse me. I got pound yen on the mind because I'm watching this pound yen situation. That says dollar Swiss 60 has broken support. Not good for you bat pattern traders. But it doesn't surprise me with the US weakness. We can take a look at that as well. All right. Pound dollar. This was another one which had a potential head and shoulders pattern on it. And again, you can see kind of the reversal right here. You can even see the lower lows, the retest up to that neckline. This was another one that was not the greatest situation because of this candlestick wick right here. So a decent looking head and shoulders, a little bit difficult to project targets, mainly because of this zone hiding right above our shoulder line. But nonetheless, still a potential reversal here. Just like with the dollar euro yen situation, I would look for a symmetrical shoulder, right? So I'd look for a retracement down into 126.60s, 126.20s. We have a deep left shoulder, so I would expect a deep right shoulder as well. Let's head over to the 60 again. Not a very appetizing situation just because of profit potential here. But one thing you can also look for is a potential counter trend opportunity as we go into that neckline looking to take a short in anticipation of that shoulder forming. But overall, I just don't see much on pound dollar. Thought it would be more appetizing than it was. Yeah, there's not a lot here. Yeah, not a lot here at all. All right, so let's go to dollar Swiss. Let's go to the dollar Swiss. Latch says we broke our previous level of structure support, which means we need to restart our analysis, restart our IPDE, right? Here on the daily, we can identify, or excuse me, the 4 hour, we can go to a daily. We haven't done it yet, but if we're looking at this and we identify that price has broken previous structure support, the next question is, what type of prediction does that allow us to make? So what would you guys say? If we can break and close below previous structure support, then we can make the prediction that price is likely to continue lower. Next is, if price is likely to continue lower, and this is going to be the more difficult one, where are we likely to continue down to? So where would you guys say? What are some levels? Naomi says 97.50s. Ross says look left. Any level in particular looking left, Ross? 98 flat. 98.50. Let me draw some of these on. 97.50. So I got two at 97.50. Two 97.50, 90.50, 98 flat, 97.50, 98.50. Going once, going twice. 97.50 is here. Our lows right there. 98 flat was the other one. 98 flat and 98.50. 98 flat is right here. 98.50s is right here. Anybody else? See why it's better to have those clear V reversals? It doesn't give you these multiple structure levels. Just give you one clear one. Yeah, I think all three are decent levels. I think 98.50s is a good level. I think 98 flat is a good level. I think 97.50s is a good level as well. I think they're all decent levels. There's previous, obviously 97.50s has our major structure. That would be the majorest of levels. But I think the other two do have significance as well. Now, which one you identify, especially between the 98.50s and 98 flat, that's going to determine how you take the trade. Because guess what? If you find importance in that 98.50 level, we've already touched it. How does that affect your trade going forward? Are you betting on us hitting that level again, twice? Are you saying the move has already been made? Right? Things you need to think about. Because if you think that the ultimate destination was 98.50s and we've already moved to 98.50s, perhaps you don't necessarily want to involve yourself in another trade where price would need to go to 98.50s for you to get involved. Perhaps that even makes you a counter trend trader where you say, hey, I'm looking for a long opportunity at this level. So depending on what levels you're eyeballing, your situation may change. I want to do one thing real quick. I want to just bring in the Fibonacci inversion from our swing high to our previous swing low and see what that gives us. 127 right at that 98 flat level. 161 is going to be a little bit lower. So you got a little bit of fib confluence down there as well. All right, so let's go down to the 240. You can see price action rallied down. Now, there are two scenarios I think we can see from this level. What do you guys think they are? If we're gonna continue lower, there's there's two ways it can happen. One is we put in a pullback. One is we come back up to retest these lows, right about the 99-cent level, and then perhaps travel down from there. The other one is we see some type of consolidation, right? The market doesn't necessarily know how to digest this news, and we kind of just hang out, very similar to what gold and platinum were doing yesterday. Those two both broke out again as well. We consolidate, and then we either, I would say most likely we break to the downside, but we could break to the upside from there as well. So those are the two scenarios. We either consolidate or we start pulling back. Let's take a look down on dollar Swiss on the 60-minute chart. It's going to be identical to the 4-hour. How about that? Identical to the 4-hour. Yeah, so we're really in a wait and see mode. But if we can retrace to 99 flat, and that's a very decent structure shelf. That's the shelf that held before. I think that's a good place to start looking for your short trades, right around 98, 99 flat to about 99.30s. We're not going to get much on the 15 or the 5, but we'll do it just to say that we did. Counter trend traders, you can look for double bottom. 26.18 is going to be your more conservative approach. Any questions on dollar Swiss? We did euro pound already, Akil. Cross that off the list. Get over here. No. All right. Let's go to Lat said Euro Swiss as well. Let's look at the Euro Swiss. What are we looking for on Euro Swiss here, Latch? Can you remind me real quick? Oh, Euro Swiss is one that had the small breakout at the bottom. I remember now. So Euro Swiss yesterday, we had the technical breakout below this channel, but we had the kind of the indecision candle, and then we came back up. And remember, Latch was looking for a shorting opportunity here. But there's really I don't really see much on here. Yeah, so I don't really have much. Is there anything particular you want to discuss on this one, Latch? Nope. All right. Let's go to, come on, pound yen. Let's go to, I got pound Aussie daily close. I got Euro Canada, bull cipher, Aussie yen, range bar pullback, Canada yen, trend continuation, head and shoulders neck, gold, next pullback. Let's go Aussie yen. Maybe we'll get an intraday look at something here on the Aussie yen. Tony's laughing at me. Yeah, 8 pips, Tony. 8 pips. I was so excited to take a trade yesterday. So we'll see. We're getting positive signs at least. Positive signs. So it's, we've held that level. The question is, are we going to be able to break past our next level of resistance? So we've held the fight to the downside. We've absorbed the pullback. We've absorbed the retracement. Can we get the extension? Can we get the extension? Now I'll tell you what. When the U.S. news came out, I thought this pound yen trade was over as well. Typically, when people run from the dollar currency, they run to the yen. So I thought, bad U.S. news. Here comes some yen strength. I'm short the yen on this pair. But we'll see. We shall see. It's the fun of trading. Hanging in there. Lasting long, right, John? Lasting long. Lasting long in a trade. All right, so Aussie yen. Similar situation to the last couple of pairs that we looked at. Recent break and close below. Here's a look at the daily. But we're in that big wick situation. So it's, again, trend continuation, trading opportunity. Yes. How low can we go? You don't know. So you want to be a cautious trend trader, in my opinion. Heading down to the 240. We're starting to pull back into previous structure. And you can see this morning, we actually got a very nice lower low, lower close candle up here. So if you're an aggressive trend trader, this could have been an area where you got involved right here, 75.56s. Going one time frame lower to the 60, you would have got a signal even closer, even sooner. But yeah, I don't see any more since we've already got that move. I don't really see any more active opportunities here. So this is not going to be a very appetizing pair. So probably shouldn't even looked at this. Probably shouldn't even looked at this. All right, let's take a quick look at. Let me see if Canada yen still has a good opportunity on it. That's another one we just saw a reaction as well. Okay, so yeah, this was another trend continuation situation. Canada yen. A lot of these yen crosses were very similar, very, 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 very similar. So Canada yen was very similar. Where again we can take a peek at the daily. We can measure out where the lows of this closes at. You can see we haven't quite gotten down there. We did get to the 80 even handle, but there's still a little bit of meat on the bone here. And same thing, we had a breakout below structure. We've retraced. This is one from a few trading edges ago. And if you're looking for a reason for entry, right? You got your retracement, came up here, 9 o'clock this morning. You got your lower low, lower close. Now, is this a tradable opportunity or not? Depends on a few things. Depends on, obviously, how you're entering, if you're entering on this type of move. Also depends on stops and targets, right? And this is going to be, how many of you guys consider yourself trend traders that that look for the extension? Or do you guys all look for a pullback to structure? Are you more like conservative trend traders or more like traditional trend traders? What would you guys say? Taylor says, I do both now. Okay, how do you, when do you do one and when do you do the other, Taylor? Just curious. And I'm talking target one. So first targets, not secondary targets. First targets, because that's typically what you're basing your risk reward off of. So first targets. Because depending on how you do it, again, it's going to determine really what opportunities you can take. Depends on how powerful structure is. Well, structure would always be the same, Taylor, right? I mean, this in a trending situation, this level of structure is always going to be exactly the same. So how would you define how powerful this is? Because this should always be the same. This is always a new structure low. It's never how many previous touches it has. The new structure low? Now I'm confused. Well, if it has previous touches, why look for a trend continuation situation? Wouldn't that be a red flag not to be a trend trader if price has held previous support? Does that make sense? Like, because we typically only want to be trend traders when. Let me ask you guys this question: when do we know that we're in a trend continuation situation or scenario? right? When we have taken out previous structure support, right? In this case, right? So the market's come down, and let's say we've done something like this. We've taken out previous structure support, and then we've retraced, and we're looking to get involved in that next move. So this move right here, it shouldn't be a recent level of structure. But I guess to your defense, it could be, you can look back and there could be other levels of structure down there. And I guess then you have to make a decision on, are we at support and do I still want to be a trend continuation trader or not, judging if we're at current support or previous support. And I guess that opens up a whole nother nest of things. So let's not even continue this conversation. But I do think you're going to have to, I feel like you're going to have a better job of defining when you do one and when you do the other. Because in my opinion, if you have a clear rule, it should be easily understandable. And of course it could be easily understandable for you because you know your specific situation. But in my opinion, if this had lots, if there were a lot of touches at this level, then it's hard for me to see you defining this as a trend continuation situation in the first place. It would be an area of previous structure support where you would be looking for the violation of that level and then a trend continuation situation. Last says minor structure, I look for retests depending on the situation with RSI, major levels of stop. Naima says, if you're doing that, doesn't it mean your touches have to be in a set period of time, last 3 months? Otherwise, you can. Yeah, that's the problem with touches. Yeah, not the problem, but that would be the. You would have to define them by touches within what time frame or time period, I guess. But that's tough as well because now we're judging. That's interesting because let's say we're at an all-time. Let's say price action returns to an all-time low. Right? It's an all-time low for a reason. Why? Because that's the lowest we've ever gone to and price has never touched it again. So if that all-time low came back in 2007, but that's the only time we've touched that level, is that a minor level of structure because it only has one touch, or is it a major level of structure because it's an all-time low? Things that make you go, right? You just ruined structure for me, Akil. But yeah, that's an interesting concept of labeling like that because what do you do in that situation? But I guess you can always just make a rules base out saying, well, if we're at an all-time structure low, then that counts as super major structure. But yeah, I definitely see your point of being able to historically define it and when. Because if you want to find 5 touches of level of structure, draw a line and scroll back far enough and you'll find 5 touches. The question is, are those 5 touches relevant? Or what's more relevant? That's the question. So Harrison, I was looking for structure levels that are confluence with Fibonacci and extension levels. Well, I guess just going back to the point is this, right? We're talking about structure a lot. If you're a trend trader, right, we shouldn't even be needing to have this conversation on structure because you should only be taking trades when structure is broken. Right? I think a counter trend trader is much more inclined to look at structure and the significances of structure and blah, 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 because they want to make sure they're trading at a level where, hey, I'm predicting that this level of previous structure support is going to hold and I can see a retracement. A trend continuation trader, in my opinion, isn't looking to get involved in the trade until they have been shown that structure has been violated. Like that's the trigger. If structure is violated, and let me know if I'm thinking a different way. If structure is violated, then I look for trend continuation. I don't even look for trend continuation until that level of structure is violated. But the point is, depending on how you take your targets, will dictate what type of trading situations you can be in, right? If you are a trader that enters right here and you want to have stops above the highs, it's not going to work if you have targets down here, right? However, if you're trading for, say, an extension, maybe you're looking for a 1-to-1 measured move or a 127. Well, now you can take the trade. So how you take the trade and what type of trader you are is going to dictate where you can take the trade and where stops have to go and all that fun stuff. You may need to take a conservative approach and say, hey, I'm going to have a much smaller stop loss. I'm going to accept the fact that I could get stopped out and may have to re-enter, but it allows me to take targets where I feel comfortable taking targets at instead of shooting for a level with your initial targets that you don't necessarily feel comfortable with. But yeah, that's a very good conversation. We could dig. I'm not going to. We could dig deeper into the structure conversation. And the fact that I don't think we should be taking trend continuation trades at structure. But with that being said, I'm not a true trend trader. So I don't really know how to think like a true trend following trader. Maybe they don't necessarily need structure to be broken. That could be a rule that just I have in here. Lifestyle Jobs Magazine. Delete. Get out of my inbox. So anyway, potential trend continuation situation here on Canada yen. That was the whole point of that. And dollar yen got a little bump and run going on dollar yen. Remember we talked about this triple bottom. Very, very, very brief retracement just to the tops of it. Now we're running a little bit there. Bump and run defense. Taylor says, that's a big question. You can break recent structure and be in a trend, but still end up in structure looking left. Well, and here's the question. Well, if that's the case, are you a trend trader? Do you trade trends at structure? So looking at this situation, right? Let's just go. I want to try and put a timestamp on here. Let's look at this situation and let's say each of these yellow lines I draw out is a previous level of structure. Well, that's not going to work out. Let's do it a different way. Let's do this. We were in an uptrend. We based off a little bit. All right. We got our 3-point move here. All right. So, as a trend trader, are you interested in taking a short right here? No. Why not? And right here, I mean by at the, should probably be more clear about that. Right at the pink line. We have not violated structure. We're sitting at structure. We're sitting at structure. Naomi says we're bullish. Let's just, how about this? Let's do this to make it. So let's make it, look, we're technically bearish. So as a trend trader, are you looking to take a structure trade? Are you looking to take a trend continuation trade here? And there's no wrong or right answer. I'm just curious where you guys are at. Low inflation itself or grounds to weigh more accommodation. All right. Anybody? No. Okay. Why not? Why not here? At new structure, low and structure. Okay. What if we pull back to here? Are you now looking to get short in anticipation of a violation of this, or not yet? Or do you need to see that violation first? Just to see where your guys' heads are at. All right, come on, pound yen. You need to move like the dollar yen. Get going. Last says depends on the RSI for me. Okay, so I guess the main question is, Latch, do you need this previous level of structure, this current level of structure, to be violated before looking for a trend continuation trade, or does it not matter that structure is violated or not? That's the point, the question I was trying to get in your heads. Do you need structure to be violated before looking for a trend continuation, or can structure hold and you still look for a trend continuation trade? Does structure matter, essentially? And at the end of the day, that's going to be the question that you have to answer for yourself. Does structure matter? Do you need a violation of structure before you can look trend continuation, or do you not care about the violation of structure? And that's going to depend on you as a trader. For some traders, they may say, hey, look, I'm looking trend continuation here, and I'm going to anticipate a break lower. For other traders, they would say, I'm not looking here because we came down to previous structure held, we couldn't get past it, so why the heck would I anticipate a move lower if we couldn't get past it before? And that would go the same as if we violate the structure and then we came down to the next level. Then it starts all over again, where it's like, okay, well, now we came to another previous level of structure. What do I need to happen here? Do I need price action to violate this structure? And if price action violates this structure, then I can look for a pullback trade? Or can price just pull back after holding this level of structure and I can still take a trend continuation trade? But at the end of the day, we need to have in our philosophy, can I look for trend continuation trades if previous structure, support, or resistance has proven to hold? Or do I need a violation? So whatever, doesn't matter what your rules are, but you need to have a clear answer for that question. Because that all goes back to our IPDE, right? Identify, predict, decide, execute. And that philosophy needs to be consistent in that as well, right? If we're doing our IPDE right here, right? What would you guys say you identify? Price is in a bearish trend, right? We've gone from bullish to bearish. And we're trading at structure support. So then the question is, what is your prediction? Is your prediction that we're likely to go higher? We're likely to go lower? We're likely to go higher then lower, right? And here's the kicker. If your prediction, if there's nothing in your prediction that says we're likely to pull back and then go lower, then you should be nowhere near a trend continuation trade. And Naomi says we're likely to pull back and then go lower. My question to that, and I'm a little bit biased in how I trade, obviously, is why? What would make us expect that? I can see why we would expect a pullback. Why would we expect a continuation lower after support has proven to hold? Because we are bearish. Okay. But why would we expect price to continue lower? Just because we are bearish, does that mean that we have to continue being bearish? What if this is the end? What if this is the structure level that holds and this is the end? Well, no, not no. It's completely different, right? I think it's two completely different things, and stick with me on this, right? I think it's two completely different things, and I'll draw these back to back. Because I don't think it's the same at all, right? So we have our situation, right? Where would I draw this, right? We have this. We have this. And we're trading at structure here, right? That's situation one. Let's take situation two, where I'm trying to draw the same levels here. It's not going to be 100% accurate, but it should be the same thing, right? We have this. We have this. Let me just adjust this a little bit. And then we have this. Okay? This is situation two. For me, situation two is clearly a better situation than situation one as far as predicting a pullback and a extension. Clearly. There's not even an argument for me. And why are they different? Because in situation two, we have violated structure. We have taken out those lows. The power that used to exist at those lows is irrelevant now. Maybe not irrelevant, but it has switched, right? In situation one, the market has rallied down into a previous level of structure support. That previous level of structure support has held. That tells me that that support is powerful. Because guess what? If it wasn't powerful, would it have held? So if I'm looking at this as being powerful, I don't necessarily have the idea that, well, we're going to come down and smash through it. As in our pullback and our extension. However, in situation two, right, we came down, we violated that level, right? So the sellers have been able to push through that level of previous structure support, telling me that that structure support is not as powerful, right? It's been violated. In this situation, I would be much more comfortable predicting a pullback and an extension past the level of previous structure that has already been taken out versus one that is already held. That's my opinion on it. Now again, I may be biased because structure is at the centerpiece of my trading philosophy. Not everyone cares about structure the same as I do. So I may be a little bit biased on how powerful structure is. But I think it's two completely different scenarios. I think it's two completely different predictions. In situation one, in my opinion, I have no right to predict an extension lower until I see a violation of structure. In prediction two, I have every right to predict an extension lower because structure has already been violated. That door has been broken down. Once it is broken down, it has opened up room for opportunity. In the first scenario, price hasn't proven to get through that door. We ran right into it and bounced back. So I'm not too keen to predict that, hey, if I run into it again, we're going to break through. That's how I see things. But whatever your philosophy is, be consistent with it. Whatever your philosophy is, be consistent with it and make sure you know what you're looking for. Make sure that if you want to be a trend continuation trader, you need this to happen. And it could be that you need a violation of structure. It could be that you don't necessarily need it. Maybe you just need something else. but you want to be consistent in what you require. That way you can work through that process, right? Because technical analysis is basically it's a flow chart, right? You're looking at each thing, and this, I identify this, whoop, follow the arrow, it takes me to there. Identify that, follow the arrow, it takes me to there. And you keep going down until you get to the actual trading scenario. Consistent analysis plus consistent execution equal consistent results. So whatever it may be for you, whatever it may be consistent. Can we agree on that? $1,000%. 1,000%. That was a fun lesson. All right. Let's look at some commodities. What do I want to look at here? Gold, we got our pregnant pause. Didn't pause for long. We got our pregnant pause and broke out to the upside here on gold. So if you're looking for, let me just write down gold real quick, GOLD, and we're at 156. If you're looking for another opportunity to buy gold, we reset the process. Structure was taken out to the high side. Wait for that pullback. Look for that other opportunity. Why is it called a pregnant pause? I have no idea. I don't know where I heard that from. Is that a Todd Brown thing? Is it a Jason Stapleton thing? Sounds like a Jason Stapleton thing. I don't know. I don't know what the term pregnant pause comes from, but it's a short stop, just like a quick stop in the market. Like taking a breather. Maybe that's why. Maybe when you're pregnant and you're going through labor, and sometimes you have to stop and just or maybe not even labor. Maybe you're pregnant and you're tired because you got a baby inside you. And you're walking around, you're like, hold on, I need a second. Whew. All right, let's keep going. Start going again. So maybe that's it. I don't know. Maybe it was a Jason Stapleton thing. He's got like, what, 6 kids? 5 kids? He's quite used to it, I suppose. But yeah, restart the process. Look for that pullback. Look for an extension up. Again, I'm not too fond of this opportunity because of my structure bias and the fact that we've already traveled the structure. But if you're projecting this to be a true flag pattern, pennant pattern breakout, you're expecting a move beyond those highs. Going to platinum? No. Platinum's dead and gone. Right? Platinum's dead and gone. We did that. We had the same thing on platinum, but we already came to the level that we projected, so that's not going to be appetizing. The DXY dollar index, we did not do what we thought we'd do in the dollar index, thanks to Powell yesterday. Gold, pound Aussie. Let's take a look at that. That pound Aussie was interesting on the daily. Actually, we saw a little bit of a break here. Yeah, pound Aussie. So let's go here, and then I'll see if you guys have any other pairs you want to take a look at. But pound Aussie, 158. Pound Aussie, we had a daily doji, which was important to me. And then we had just nasty consolidation. But we were coming down the previous structure, as you can see. And we had a nice little daily doji, right? RSI is oversold as well, if you want to take that into account. What I'd be looking for in a day's close is a higher high, higher close. I think a higher high, higher close would give us a strong signal that we're likely to see some type of continuation. Now, obviously, you got to wait till the end of the day for that to happen. But if you're a trader on the daily chart, you're used to being patient. But as I went down to the lower time frames, we know that a doji is a sign of consolidation. We started seeing like a little wedge pattern here, and I was thinking that you can look to trade a wedge breakout as well. Again, the situation is a little bit dirty just because of this action is anything but clean. It's just a little bit of a shuffle. It makes life so hard for me. So I think just waiting for a a daily close is going to be more important. But yeah, if you wait for a daily close here, that could be a sign of a potential reversal. I'd look for a move back into 183s. 183s can certainly be doable. Let's just take a look real quick on pound Aussie range bar. Yeah, still just nasty. Still just nasty. All right. All right. Any other pairs or anything you guys want to look at or talk about? What's Canada doing here? We back to still under break even on Canada, guys. Just under break even. Dow Canada. Just waiting on trades now. Dollar yen got a little bit of a pound yen, excuse me, a little bit of a move, but we'll see. Anything else, guys? Anything? Going once, going twice? You're like, nope, ready to go. Let me get out of here. All right. Well, I'll get this loaded up for you guys, and I'll see you on the platform a little bit later. Have a great day.